All right. Good morning and happy hump day, everybody. Welcome to the live stream. We do this every Wednesday. We'll be featuring our IWJ Pivot Point Pro indicator. Yesterday it was 5 for 5 on trades. None of them were runners. Yesterday was a fairly choppy day overall, but 5 wins is 5 wins, and it was a very nice winning day. Even though they were all small wins, those do add up. And we've had a great September so far. The start of September, we had huge week the first week. Monday was a little bit of a slow day. And then yesterday we were 5 for 5. So really nice trading so far this month. Really crushing it with the indicator. And that's what we're here to feature. My name is Jacob Gabbard. This is the Invest with Jacob live stream. And the point of these live streams is to, one, get you in to see what we're all about and what I do and show you our methodology and how I come up with levels and what we do with our indicator, those types of things. And then two, to feature our trading tool, which is the indicator. And if you're new here, we don't peddle weird things like get rich quick or here's a trade, good luck. I try to explain all of my trades. Even though they're indicator based, we try to look at key levels, what's happening, why we think the market's going to do something, all of those different things that allow you to start to put together your own trading plan, your own trading style, and actually understand the market instead of throw your hands up and say it's rigged or any number of excuses people come up with when they can't figure it out. The fact is, the market is based primarily on emotion and key levels and volume, and all of the rest of the stuff is just noise. The earnings reports, the Fed announcements, the geopolitical events. Yes, they move the market. Obviously, we see that PPI jumped the market 30 points here on the screen or so, or 3 SPY points. But they are not necessarily indicative of what the news is. So good news doesn't make the market go up necessarily, and bad news doesn't make the market go down. And when that's the case, it's essentially arbitrary. You can't just say, well, 6 times good news made the market go up and 4 times it made it go down, so good news makes the market go up. No, that's not really how it works. I can show you time and time again where some of the worst news in market history has produced some of the greatest rallies in market history, and vice versa. Some of the best news in market history has produced some of the worst corrections. Right before the Great Depression, it was the Roaring '20s. People were literally saying the market could never fall. It'll never crash again. This is going to be the greatest times in the history of the world, blah, blah, blah. And then you saw the Great Depression. And we are entering, in my opinion, close to that sort of euphoria now, especially with young investors who are mostly online, who mostly don't understand the days of reading a newspaper and watching tickers through that and those types of things. They don't remember the corrections. Even in the 2000 to 2009 correction, which is a 9-year correction, we're very biased to the bull side. And part of that's we've had a 100-year bull market, essentially from the low of the Great Depression. And we've had a very strong bull market in most recent times. And even the COVID correction, which was severe in depth, was not severe in time. It was a flash crash. And so people are still of the opinion that even if the market does crash, it's going to be back at new all-time highs in a week or a month. And while that has been fairly true of late, that's a recency bias and not really how the market works in the big picture. So at any rate, we are here to discuss the market, the key levels, go through our trades, and overall outlook on the market. So the indicator we use is called IWJ Pivot Point Pro. It is a trading view only indicator, meaning you can only use it in trading view, and the reason is they protect the code that we wrote for it, and other places don't. So we can't have our proprietary code out there exposed. So it is trading view only, unfortunately. The levels you see on the screen here, first in blue, we'll just go over everything in blue. This is pre-market trading, or post-market trading, excuse me. In yellow, it is pre-market trading for the SPY. This is the 5-minute SPY chart. And we do use this for day trading and swing trading. So 5-minute chart for day trading, the weekly chart for swing trading. And it's been extremely effective on the swing trading side as well. The levels that you see there, the 1-day max, the call resistance, the high volume levels, the 1-day min, all these types, the put support, these all come from a place called Mentor Q, and they're outstanding levels. They're based on options and money flow, and that's really what drives the market. These are the places that we expect support and resistance. So if you're coming in from above, you expect support. If you're coming in from below, you expect resistance. The one-day max and one-day min are usually very, very solid levels for kind of capping out what the market should expect to do on a given day. Now, I use this analogy a lot because people say, oh, if you have a one-day max and it goes through the one-day max, what's the point? Well, the point is the shoreline. People build their houses on the ocean all the time because we know that 98% of the time, we know the tides, we know how high the ocean's going to come up, we know where we can safely build houses. So that's kind of the perimeter of where we build. However, 2% of the time, you have hurricanes, and hurricanes push the tide, and hurricanes push the ocean, and they break through the key areas that are generally safe for houses to be built, and houses get underwater. That happens in the stock market too. We have a one-day max, which generally, and a one-day min, which generally will contain the move of the day. However, on certain days when the volume is really strong or the move is really strong, they can blow through those levels to the next level. So we play high probability things like that. Look for setups like that off of those levels. And that's kind of how we view these levels. Is the one-day max and min are the overall expected high and low of the market potential. That doesn't mean it's going to hit the one-day max and or the one-day min. It means that if the market gets aggressive in a particular direction, that is likely to cap it. We can see choppy days that never hit either. They're just there for kind of a backstop. Your call resistance is going to be your highest level option levels struck. So the 0 DTE is the highest level for today. You also have a secondary level as well. And your high volume levels are very high volume option levels that are not the highest. So you can see our big levels today are going to be 653, 650, 648, 47, and then the one-day min down here at 645, 68, with the one-day max at 65, 655, 55 or so. I'm sorry, 655.06, excuse me. So we're looking at those levels as very, very important levels for the market. If you want these levels on your chart, you can get Mentor Q. I use the gamma levels end of day and intraday. You have to go to their website. It's a paid service, but I do have a link in the description that will give you 20% off. Of course, I get a kickback for referring you to them, but you get a discount too. So everybody wins in that scenario. It's no big deal to use the link. It helps me out. It helps you out. There's no discount if you just go over to the site by yourself. So check that out if you want to do that. If you want to get the indicator, you go over to investwithjacob.com, member plans, or just go to investwithjacob.com. Go to the membership plans area. You'll come to this page. I am tired and worn out from traveling, guys. I can't speak. You'll see our monthly rooms. These are different than what we're featuring today. Today is the indicator, but if you want this kind of service every day where I give updates on the market, give you the key levels, tell you why the market's going to move the way it is, get our midday call, which is about a half hour to 1 hour call on all the stocks that matter, including the ones you ask for. These are the rooms you want to be in. My room gives you all of this stuff below. PT's room, you get all of my room as well as the other stuff listed here. But if you want the indicator, which we're talking about now, you scroll down to Trading View Indicators. It's the day and swing trade indicator. You have the monthly and the yearly price. You get 2 months free on the yearly, and both of them have a 30-day money-back guarantee because I want you guys to be able to try it out. You can paper trade it. You can just put it on your chart and watch it. You don't have to spend any money investing in it. So you can buy it for $59, or actually today you get 30% off your first month with code JG30. You can get that 30 days, check it out. You don't even have to trade it. If you don't like it, you didn't risk a single thing, and you get your money back. If you do like it, you keep it, and you make money like we do. We've absolutely killed it over the last 20 months. August, not our best month. It was not a good month, but that happens. You have winning and losing months, and we have, out of the last 20 months, I believe we are 15 winning months, 5 losing months, and overall we're up 66,000. I can bring up the numbers here in a minute. Based on a $100,000 account. Now we simply recently have moved into what I call a full trading position. So we were trading 25 contracts, and because of the success of the day trade indicator and how well we're doing, The account has built up enough that we can do 50 contracts at a time. So now our position has moved from what I call a half position to a full position, which is 50 contracts. So start of September, we did that. It's been going very, very, very well. And we're just killing it with the indicator. We have plenty of people who use the indicator who will be in this room, who I know will vouch for it. You don't have to just listen to me. They will also, hopefully, I can't speak for everybody, but hopefully they will talk about their success with the indicator. So really simple rules, and those rules, once you get the indicator, those rules are listed right here. So first things first, read everything, guys. It's really important. It tells you exactly what to do and how to do it. So the first part is you got to give me your information for TradingView so I can give you the indicator. The second part is you need at least an essential account for TradingView, as well as the real-time data for the NASDAQ and the ES, which is this CME CBOT COMEX. This is exactly what it's called, and it's $7 a month. And then you scroll down and watch the videos, how to set it up with TradingView, how to set up the indicator, our day trading strategy exactly as we use it, and our trend day strategy, and then our weekly swing strategy exactly how we use it. So it's you get everything we use here. You guys get everything you need to use the indicator exactly how I use it to get the returns I get. And if you simply follow the rules, that's how you beat the market. The market is not about every trade being a winner or getting rich quick. It is about finding an edge. And an edge simply means that most of the time it's going to play out. And that's how we are with the indicator. Most of the time we have winning trades. And that's exactly what you're looking for. So then you have to size properly. You have to understand your risk reward. And then you have to apply that edge relentlessly. If you have a 65% win rate, that means that 35% of the time you're going to lose. So people try the indicator for a day and they see a losing trade and they're like, I don't want to do this. It's not a good product. That's an absolute insane way to look at things. That's why you get a 30-day money back guarantee, because I want you to at least try it for a month before you decide that it's just not working, because we're going to have bad days. We might have one today. I don't know. We're going to have bad weeks. We even have bad months like we did last month. August was not a good month, but I'm open about that because that's life and that's part of trading and that's real. I don't peddle BS like other people on the YouTubes do. I don't peddle 98% win rates or things that just aren't real. I tell you exactly what's happening and exactly what's going on, and when it's not going good, I tell you, and when it's going great, I tell you. Because that's what real trading is about, and real understanding and how to control your emotion. If everything is rainbows and butterflies, you live in a very different world than I do. And it's one that I don't want to live in, because it's then a selfish, everything's all about me and everything has to be my way world, and I don't like that. So there's going to be adversity in every world you live in, or there should be. So if we assume that this is our break-even line, and we set our stop, which is usually 50 cents on the SPY, and then we have our first take at 20%, we win more than we lose. So if we have a loser here, we lose whatever we lose here. But then we have a winner with a runner, a winner, and a winner. The small winners counter our loss, and the runner, and what that means is we take our first profit at 20%, and then we start trailing stops and taking more profits at key levels. So this allows us to grow our win, or what I call maximize your gains while minimizing your risk. Your risk is capped, your gains are uncapped, and we let the market decide how far it wants to run. We don't get to tell it to stop going up or down, we just follow it. And so with this strategy, it allows us to absorb losers in a very, very powerful way, because since we have more winners than losers, our small winners will cancel out the losers, and then our runners are basically all profit. And that's how we get these returns that we get, because we minimize our risk to a great degree, and then we allow our winners to run. And that's how you trade. You don't revenge trade. You don't add on trade. You don't do all these trade emotionally, trade because you're bored, all these different things that will destroy your account. You trade a very specific robotic style, and it's extraordinarily boring, but it's also extraordinarily profitable. If you just follow the rules, you will build your account very quickly. You'll be surprised at the end of the year where you're at, and you'll do very well in trading. If you don't follow the rules, you may have days that you're like, oh my God, I made 2,000% on my account today. And then 4 days later, you're out of money, because that's how that works. And it's almost never fails, because people think they can beat the market on every trade. They overplay, they get overly attached emotionally, and they make bad decisions. So again, we want to trade in the smartest way possible. And I'm not saying mine is the smartest way possible, but it's the smartest way I know how to trade. And I'm always watching videos and learning and trying to improve on myself, because you can always get better. I can always figure out new things and improve on things. You should too. As far as the counts go, on the ES, we are in a diagonal type structure here. And we're looking at this as, currently we're looking at it anyway, as a too far, too fast type of deal, where you get 1, 2, 3 in a diagonal structure, because you have an ABC here. And then 4 comes back into 1 territory, and then you have an ABC for 5. This is not my most preferred path, in all honesty, because this 4 becomes pretty big in this, or this 5, I mean, becomes pretty big in this overall count. But it is still valid. We do still keep it as the primary path, because it is the most likely path. And yesterday I told my group if they got over 65.20, we would likely see 65.50 to 65.80, and that's where we're at right now. So right now we are in the wheelhouse of where I would look for them to turn down. We also have a one-day max that's they kind of went into today. If we look back at the chart, you can see the one-day max is about where they spiked the pre-market high. So that's going to provide very much resistance today. We'll see if they're able to break through it. And keep in mind, this one-day max doesn't mean that they hit it and turn down. They can get up here and then by the end of the day be back below it. This means most often they're going to close under 655. Most often. Not always, but most often. So we are looking for this fifth wave to complete in a pretty clear rising wedge, or diagonal as we call it, an Elliott wave. Should that happen, we would look for a sharp sell-off, typically back toward the origination point, which is the August lows at about 6,200, and then we'll see how we react there. It's for certainly possible that they can hold there and try for another all-time high. Certainly possible. I would expect at least a bounce here, right? So I'd expect them to come into this level if they do come down and bounce, and then if they're going to break it, do it like that. I would not expect them to drive straight through this wedge here, this low. NASDAQ, they have now pushed to where they've pushed through. We had key support at 28.9. They've pushed through that. I said if they do that, they're likely going to push to all-time highs around 24,150 to 24,370, even as high as 24,500. But we would look for this wave 5 to be contained in that, and look for the NASDAQ to push to an all-time high maybe at the open here, and we'll see what happens after that. So that's where we're at in the counts. The key support is the August lows. As long as they remain above the August lows, this market is a straight bull market, and you should be looking for bull things to happen. And, you can speculate on bear moves. There's nothing wrong with speculative plays at the right place and the right time. You can speculate on those to see if they play out, but you should not be expecting those until support breaks, which, again, is a minimum of the August lows to really get the ball rolling to the downside. Hello, have we touched on the diagonal, top of the diagonal on ES? Yeah, we just did that. I think that comment was from earlier. Welcome to the stream. Williamstown, good morning. The market already hit the one-day max. Did they update it? Not sure if the PPI bounce affected the typical morning Mentor Q update. They didn't quite hit it. I refreshed it right before I started. Let me refresh again because they update it throughout the day. Let me just refresh again and see if there's another update. But the one-day max was right at where they topped out at on the PPI spike. I would expect a test of that at a minimum at the open, and maybe even a spike through it. It's going to really depend on the ADD and the VOLD and the RTY. The RTY is not really loving the bounce as much as the ES and NQ is, and the banks are also red, or they were red. Are they still red? Yeah, the banks are also red to start the day. So those are signs of weakness, and the markets hit the one-day max. So it's very possible you get, like you did last Friday, a pop and drop type day with that one-day max just sitting right above us there. Hello, cats at home. Welcome to the stream. Rambler, welcome to the stream. Good morning. Alexi, good morning. Have I missed your pre-market wave analysis? I just did it. You can rewind a little bit and watch it. Mornings, George. How's it going? Welcome to the stream, everybody. Glad you're here. Going to make some money today, I hope. Have a good day. Remember, this is only one day. It's a snippet in time of the market. You should not be making decisions on anything, market direction, path, on one-day moves. You see lots of one-day moves that go down 2%, and then the next day they're back at all-time highs. Things like that happen all the time in the market. So it's just a snippet in time. We look at the big picture and the bigger context. Right now, the bigger context is we are in a very aggressive bull market until we aren't. That doesn't mean it's not showing signs of exhaustion. It definitely is. But that doesn't mean it can't go higher. So you play level to level. Next level, we look, see if we get a buy or sell signal, and play it. In the bigger picture, we look to see if we get weekly buy or sell signals, and we play them. Whether they work out or not is, to be determined on any given trade. But this market went from the April lows to the all-time highs. It's the third fastest recovery from that big of a drop in the history of the market, and that tells you it's an anomaly. It is not a normal buying time or buying, what's the word I'm looking for? Rally. It's not a normal rally. Third fastest in history of a drop that big back to all-time highs. That tells you that you're starting to see euphoric state where everybody is buying. That's how you get those kind of moves. You can't get back that quickly without very, very aggressive buying, and that usually means retail's on board too. So you're starting to hit that euphoric state of the market where everybody thinks that it can only go up, so they buy aggressively, and they're doing well. I mean, there's nothing wrong with that strategy. It's a bull market. You should play it as a bull market until proven otherwise. But caution is also warranted in those types of moves, because when they do die out, whenever that is, you let them run their course. You wait for support to break. But when they do die out, they die out usually with a swan dive. Prebs, good morning, JG. Trying something new using the indicator. We'll let you know my results in a few weeks. Good luck. I told somebody in an email the other day, the two biggest fallacies of inexperienced traders are, one, I can improve upon a professional trading tool. It's not necessarily a fallacy. Of course you can improve upon it. Of course I can improve upon it. Of course it can get better. However, if you're an inexperienced trader, I caution against those types of things. Typically they result in losses of money. And then, so good luck. I'm not telling you not to do it. I'm telling you, typically those things are tougher to do. I don't go in with my 40-mile-an-hour fastball and try to tell Nolan Ryan how to move a baseball. And I'm not saying I'm Nolan Ryan or anything like that, guys. Please, this is not an egotistical thing. This is I don't want you to lose money thing. I just, in fact, I wrote this with a professional day trader. I am not a great day trader by trade. And so a lot of the information, we co-wrote this together. A lot of the information and stuff that triggers comes from his work. So that is just something to think about when you do those types of things. Sorry. Yeah, so that, good luck. Like I said, good luck, but just be careful with that. Go very small. When you test something, either paper trade it. That's the best thing to do, in my opinion. Or trade like one contract or two contracts. Fifth wave of 5 of third intermediate. Potentially, it could be. I think, we're getting to a point where this large Roman numeral 3 is going to rear its head, and that will be the big top that we're looking for. Is it possible that this 3 here can move over? Yes, of course it is. So this can, go here, and then we'd make a 4 that comes down and test these lows or even the April lows, and then go back up in 5. That is a possibility. And until the April lows break, it will remain a possibility. And really, this low right here, this is... Sorry, I need to update this. I thought I did this yesterday. They must have moved back. These should be here. Sorry, guys. One sec. Actually, this should be here. A little off. Sorry about that. I thought this saved yesterday. Obviously, it did not. Where did the 3, 4, and 5 of this one go? Oh, 3 and 4 right here. So, this goes here. This goes here. Yeah, and then there's 5 here. Okay. So, this 3 can move over a spot, and this 4, they would come down and test these lows here at 62.50. Would come over here, and you'd have 3 and 4, and then 5. That is a possibility, but it's also possible that we are hitting this big Roman numeral 3 here. And all of that is level to level, and this is the misconception of Elliott Wave. Everyone wants to demonize it for constantly moving it around, and that's not the point, especially in the small stuff. Like the micro counts are fairly unreliable. You're building a structure, and until some of that structure is built, you're constantly rearranging things because you need to see the 5-wave move play out. So you start plotting that, and if that fails, you replot to a new thing. But in the bigger picture, we have general minimum targets that hit, and hit really, really, really often. I mean, back in the COVID time when we dropped, I was expecting a rally back to 4,000 plus, which we got, obviously. We were expecting overall, if you look at my original big picture, I was expecting 6,500 or so on the SPX, which is where we're at. And that was all the way back around COVID times when we were around 3,000. So I was looking for the market to go up in the next 4 or 5 years to this level with almost 100%. And that's all based on Elliott Wave. So the big picture Elliott Wave stuff is usually very accurate and very strong. But in the micro counts, you get a little bit convoluted because, you can have so many different structures that build and start the same way. You can have a 1-2 start, which can be an impulsive start that turns into an ABC, that turns into a diagonal, that turns into a double 3, turns into a triangle, turns into whatever you want to call it. So you start somewhere, you build, and then once you start building your foundation and get your foundation in place, then you have really, really good long-term targets. Short-term targets are, again, you need structure and you need idea, and they still play out really well. If you've been in my room, you know that, we're opening. Sorry, guys. I got, dang, they sold it right before the open. So they gave us a sell right before the open, which obviously played out. We were looking for this to do that. Not trying to improve, working on not being greedy. That's a good thing to do. So we have a fairly low ADD open today. It's positive 150 and dropping. Volt is positive as well. They gave us the sell right before the market, so we did not get the sell alert. That happens sometimes, unfortunately. And they're selling back the PPI candle right now. This level right here will be really important. 652.35 or so. This is where they spiked up from. They aren't going to want to break below that. If they break below that, very likely we're coming into 651.28 after that. But you do have a spike here and a breakdown below VWAP, so I would say 651.28 is still a very likely target. But they're going to have, before I fully get on board with that, they got to get through this breakup area. Once they do that, then we're looking at that level, and then we'll need to see the overall low, which was back here at 649, so 650 basically. Today will be a case of can the Bears follow through or can the Bulls follow through? And that I get that. That's a case of every day. But right now you're at all-time highs and you're in the resistance zone. The Bears have been rejected at every turn. So if they're going to make a move, they need to start breaking some support and being aggressive. And that's not all going to happen in one day, but a start to that is breaking some support. I got to rambling there, forgot we were opening. Thought I had unlimited time. Clearly, we did not. But we didn't miss anything, so that's a good thing. Unfortunately, the sell came right before the open. So, Eck was trying to tell me. Sorry, Eck. Welcome to the stream. Will, hello. How's it going, man? Good to see you. Is Oracle for real? I'll be honest. I didn't see what Oracle did. I don't. I have about 7 to 10 stocks I study very hard, and then I let rest kind of go because it can be so much to look at everything. I like to focus in on very specific things and be very one-dimensional in trading, if that makes sense. And I think that is a really good way, especially for new traders. Master one thing. I have about 7 I keep track of, and it's a lot. But the first thing I mastered was trying to trade the SPY in the S&P properly. And then after that, I moved on to other things. Buying a stock and having a portfolio is one thing, but like trying to trade them aggressively and stuff. I have about 7 I keep track of, and that's about it. So I have not seen what Oracle promised. Funny, Nikki, would be great if you demo indicator on the big picture for falling knives like TTD, UNH, Lulu, how it behaves on large gaps, etc. So that would be more of the weekly analysis, I believe. On the daily analysis, you're gonna have trend days on those kind of days. So if you watch the trend day video, we talk about the fact that if you break the pre-market high or low, back test, and then make a new low, we stay out of counter trend trading because you have a trend day. It's likely to break support instead of hold it, or break resistance instead of hold it, and we don't want to try to trade against that. But just to look, I know Lulu's dropped off the map. While we got a minute here, I'll watch the comments while I'm doing this. Somebody alert me if something weird happens, but I think we've got a minute before another trade's going to be able to come up. So let's switch this over to Lulu on the weekly and just see how it did. I don't know. I have no clue what we're getting ready to look at. So now keep in mind I have to put in the settings here before so don't look at anything yet because I got to change this to Lulu and this to Lulu. And we got to change this to 1 and hit OK. And let's see what we get here. If anything. So it gave you a sell all the way back here at, let's see, that was 400, and they took it down to 240, so that's a pretty good hit. It gave you a sell up here at 480 and took you down. You would have switched on this buy, but it took you down to 305. And remember, when you're using the weekly indicator, when it reverses or it gives you a stop, you go back to shorting it. So in this case, you had a short, they gave you a buy, they gave you a stop, so you go back to shorting it on down to here. Then they gave you the sell again. So it's, you got a little buy here, and then you reversed it, and then dropped again. So had you taken the sells here on Lulu, you would have done okay. Lulu chopped for a while, though, and you can see choppy markets are hard to trade, but you would have done okay. I mean, if you took this buy, that's going to be a winning trade if you manage it right. This buy may or may not have been a winning trade, but you're going to get some chop. This sell should have been a win. This buy should have been a win, or at least a break even. you got to manage your trades, but for the most part, you're getting, when they drop off a cliff like that, you're getting a pretty good chunk of it. You do have to make sure you have your indicator set up right when you're trading it, because it is important. I don't want that. That is not what I want. We are monitoring the ES and the NASDAQ all at the same time when we're trading. This is how we find broad buying and selling patterns. This allows us to, so for instance, the other day, the ES was flat and the NASDAQ was ripping, and we didn't get any trades during that time because the markets are out of sync. And when they're not in sync, you're going to get choppy trading. And then the NASDAQ went down and the ES went up, and you got choppy trading again, and we didn't get trades then either. So it tries to filter out as much of that noise as it can, to give you broad buying and selling opportunities. And we also ignore all the pre-market and post-market stuff. This is all low volume trading. And the two weaknesses of the indicator, there's no question about it, are trend days, which is why we have a trend day strategy, and low volume trading, which is why holidays are a little tough. The Christmas time trading is not the best time of year for us because the volume is very low. The market tends to drift up. And so what the indicator is looking for is, it's a whole host of factors. But one of the things that drives predictable market behavior is low volume moves to highs or lows typically get bought or sold. But in holiday times, those low volume moves are because of lack of participation, because people are on holiday, not because people are uninterested in the market. And so it can trick the indicator into thinking that it's a weak move when really it's a strong move if you consider the volume versus the participants in the market at that time. We're still moving down. We're going to have a ways here before we get a trade, I believe. Funny, Nikki also mentioned UNH, which I knew fell off a cliff, so let's look at that one too. Again, no idea what we're going to see on the weekly chart for those swing trades, but generally we catch tops and bottoms pretty well. And we need to go here. So it gave you a buy right here at 251. It's back to 343. That's a pretty good winner. And it gave you a long stop here. So this would be a sell. You would have got in at 452 on this sell, and they wrote it all the way down to 232. So 450, that's 220 points. That's a 50% drop, and you would have had it nailed. And then they gave you the buy right here, and they're up 94 points on that. So those two trades alone would have made your year. And then the chop before, they had the sell here, and that sell would have been a winner. Remember, you don't switch out of your weekly until you get a stop. So we have a sell. Yep, they poked it higher, and then they dropped it really sharply. So you got the sell entry here at 570 down to 481. So that was about 90 points down. Not bad. At 15% almost. Maybe a little more than that, 17%. And then you got to buy this short here. You would have done okay. This buy, you would have done okay. And then, of course, you got out of this buy right here. So remember, on this long stop down, you gotta have after you take a profit, you gotta have some sort of mechanism for stopping out. But if you waited all the way till here, you took a loss, no doubt, overall. But you should have taken some profit on the move up. I mean, this was a 90-point move up. You got to take some profit. But anyway, 455 down to, well, actually down to 230. So 220 points down. That's a 50% drop. So I think it did okay on those. You got to remember that on swings, you may lose $5 or $6 because you're going 6 months out, but on a 200-point drop, you just made $25, $30. Well, maybe more. Who knows? A 200-point drop on that type of stock. I mean, that would have been $200. I'm thinking SPY to ES conversion. Sorry. A 200-point drop. If you have options there, you're making a lot. NQ is lower than the PPI spike now. Yeah, and still holding down there. It's not bouncing. So you would expect. Well, you got two issues in my opinion. ES is not participating in getting down here to the spike. It's trying to. It may catch up. NQ generally leads, but for the bear side of things, you would expect them if if you're a bull, you would expect them to come down and bounce on NQ, and since they didn't do that. You can, they have the potential to break through. It's a good thing for the bears, is what I'm trying to say. So you'd expect them to bounce. I guess they did. They bounced it initially. Okay, and then they came back down and break through. So that's a good sign for the bears. You would expect them to come down, hit this level right here, which they did. They spiked it by a few pennies. You would expect them to bounce, or a few points. You'd expect them to bounce. They back tested 21, and then they made a lower low. So that's a good sign for the bears. Did the sell arrow go away? No. What sell arrow are you talking about? There's the sell that was pre-market, but after that, you're not going to get a new sell. Oh, I think I got to switch this back. Yeah. Yeah, there it is. Just had to calculate it. I wouldn't be surprised if the CPI leaks this afternoon. Could see some action. Certainly possible. This was so it depends on how it falls, but usually the first one is one direction in the story of my life. I'm a music person. I know even terrible band songs. The first one of PPI and CPI is in one direction very often, and then the second one goes in the opposite direction. They kind of even themselves out. Now, if they're going to trend, then you'll see something a little different. Especially if PPI popped pre-market and then sells today, and then CPI sells tomorrow, then you'll see something a little different. But so far, all they've done is move up into our 65, 50 to 80 target that we gave a while back. A little bit odd pattern. So I was thinking the 65.24 may have been good enough for the all-time high. We were looking for 30 to 50, and then after that, the target moved up to 50 to 80, but just based on how the fibs worked. But so far, we're in that zone. They spiked it up to pre-market to, 64. What was the high in the ES today? $65, 65, yeah. So they were right in the middle of that zone, almost dead smack in the middle of it. You want to see ES and SPY start following through to the downside if you're a bear and you'd like to see the market come down a little bit. Otherwise, they're looking to build some structure here and try to push and test the pre-market high and the all-time high. So I was thinking our first trade today was going to be a short, and it could have been if they would have got this sell at the right time, but they didn't. So now it could be a buy, but ES still isn't quite into its sell cycle yet. If you don't know what I mean by that, it's a long story, but this sell does not mean we're in a sell cycle. It means that the buy cycle is weakening, and then as it moves down and continues, it converts into a sell cycle until the sell cycle starts to weaken, and then we look for a buy signal. So until we enter a full sell cycle, we can't get a buy signal. ES has not, NQ has entered a sell cycle, but ES has not entered a sell cycle. It's still technically in a buying cycle. How do you check ADD and Vold? I use Thinkorswim, so I have my Thinkorswim on another screen here, and I can't bring it over because it won't allow you to. It will. I mean, I can bring it over, but it won't show it to you unless I like copy and paste it on the map. But they are. If you use $ADD and $Vold in Thinkorswim, you'll see them. I will say that the ADD was dropping earlier. It has moved up to 626 positive, so that is something to keep an eye on. Again, though, RTY is lagging a little. It's still green, so not a problem there for the bulls, but usually you want RTY leading on days like this. The transports are slightly green. The banks have moved to flat. And then if you look at the Mag 7 struggling. So NVIDIA is not struggling. I don't know what they said today that gave them such a boost, but they're crushing. Meta is down 1.6. Microsoft is down 0.25%. Netflix is down almost 1%. Amazon down 3%. Apple's down almost 2%, and Google's down a little over 0.5%. So the Mag 7 is struggling, and this is another case of the Mag 7 versus the market. But NVIDIA, the biggest stock in the world, is going to help being up 4%. That's going to be a strong. That's going to be a strong bench press of the market. They're going to be hard to bring the market down when they are ripping like that. So you have a little bit of an interesting scenario here where NQ is really not participating in this bounce, and ES is. So we're going to have to see who's telling the truth. NQ, obviously the Mag 7 struggling a little bit. That's why they're a little lower than ES, or have dropped a little more than ES here, all the way back to the PPI low. NASDAQ typically is the leader, so we'll have to see exactly how that plays out. How come the call wall so low? 650, is there one higher? Probably. There's one at 653 that they're just above, but there'll be a new one. You know, these are day to day, so this is today's. And it's acting as support as it should. You know, they spiked it and then held. So the bears are going to need to get through this call wall. If they do, they need to get through the next level, which is the 652.39. And then if they get through that, we'll look at the next levels after that. But that's where we're at for that. Welcome to the stream, Sean. Welcome to the stream, Sunny. Mag 7 is down huge, while overall indices haven't given much. Some of the Mag 7. You got to remember, NVIDIA will balance out a lot of that. It's the biggest stock in the world. Microsoft is one of the biggest in the world, and those two are flat and 4% up. So that'll counter a lot of Amazon and Meta's woes. And then you have an ADD that's doing pretty well, so the market itself overall is advancing. So you have a breadth issue. You have good breadth and bad Mag 7. And the Mag 7, so the Mag 7 guys, they control like 40% of the market, I believe it is. It's the largest portion of market gains of this rally. Everything is concentrated, and that's what a bubble is. It's a concentrated market, and it's all concentrated in basically those 7 stocks. There's actually 10, I think, if you add in PLTR and some others, I believe. But that is something that you should look for supporting evidence. When the Mag 7 is red, It's very unlikely for the market to break out, even if the rest of the market is green. If the Mag 7 is green, it's very hard for the market to advance. Even if, I'm sorry, if the Mag 7 is green, it's very hard for the market to drop, even if it's a broad market selling other than the Mag 7, because they are such powerful contributors to the market. So if they are not on board with the direction of the market that you want, in other words, if you were bullish today, I would be a little skeptical and worried. Only a little, not, we haven't broken any support yet, but NASDAQ does look a little worrisome. And they are trying to poke down through this call resistance again on the ES. So you got to take into account the overall context of the market. You like market alignment when you're looking for a broad move. In other words, if you're looking for a complete sell-off or a huge rally, you want market alignment. And that's why we track the NQ, ES, and SPY all together, because if there's market alignment, they're buying across the board or selling across the board. And that's when we get these huge moves, and that's why we jump onto those types of things. Slow day so far. You got the sell right before the open, so we can't take it. That's just part of the rules. We don't break the rules. If you break the rules, you lose money. That's just the way it goes. So we didn't get that sell. Right now, the NASDAQ is trying to break down a little bit. We're also looking at ES trying here to make a new low. They came down to 652.70, and then they just tested it, but they haven't been able to get through it. Again, the next key level on the SPY is going to be 652.38. Maybe they didn't update their numbers, put support. Nope, 640 and 635 are where the put walls are. It's just it's a wide range. You got lots of volatility over the next week. You have CPI tomorrow, PPI today, Fed next week. You just have a wide range of where people are stacking. So if you draw this over a little more, it's twofold. So you had them come up to this level and fail it, right? They bounced off of it. They came up to this level, got through it, back tested it, and then PPI rather accelerated off of it. Now they're trying to back test it again. So breaking this level would be significant to get started. It's not significant in the big picture. It's significant in the daily picture. The market will tell you exactly where the key levels are. It said, hey, we don't like this level. Okay, we're okay with this level. Let's make sure we're okay with this level. Yep, we love this level. And now they're going to come back and see that level again and see if they can hold it. Or they basically come back and tested it a couple times. They haven't quite gotten there. But now they're in the process of trying to put in a higher low here. If they get back above these highs at 653.91 or so, it's very likely we're going to come up and test 655. What you'd like to see if you are bearish is you'd like to see, one, a breakdown of those support levels. Then two, you'd like to see the ADD start to follow suit and turn down. An advancing ADD is always a sign of strength. You'd like to see the banks start to weaken. You'd like to see RTY start to go red. If you see all those things, then you can start to look at a potential down day in the market where they could close the gap and then some. However, if those things don't happen in the next probably hour or so, you're very likely looking at some kind of support hold and grind sideways to up the rest of the day. The market is a lot about emotion, but also a lot about momentum. So you have people sitting on the sidelines watching, and they're looking at support going, okay, it looks like they're trying to hold this support level. So now they're looking for either a green spike to get on board long or a red spike to potentially get on board short. But as long as it's sitting sideways like it is, they're sitting there not putting any money in the market. So somebody's got to push the market through a key level so that momentum can build and all the sideliners can get on board. Oh. I just got an update that Kentucky is going to play two quarterbacks this week. I know I'm veering off topic there. I'm a Kentucky fan, and playing two quarterbacks, that's about the worst thing I could ever hear. So at least we're playing Eastern Michigan. They should win that game, but doesn't bode promising for the rest of the season, that's for sure. If you get a sell stop on the weekly chart, do you exit your short position or wait for it to hold on Friday, end of day? You wait for it to hold Friday. I mean, there are times where the market goes haywire and you just have to make the decision that enough is enough. So let's say today, it's Wednesday, uh, the market is decides to go up another 80 points. I mean, at some point you have to pull the plug if you're short, and vice versa. If you're long and the market goes down 80 points, you kind of have to have your own threshold. But typically, the idea is you wait till the sell stop prints on Friday, because there are lots of times you get a spike on Monday or Tuesday that would initiate the sell stop, but by Friday the market has crashed. And that's indicative of higher lows and things like that. So typically, you want to wait until Friday. However, there are circumstances where you just have to say, I can't withstand anymore. This is just what I can do. Um, and you need to just go ahead and pull the plug. But that's up to your risk tolerance and your thresholds and how you trade. A guy with $1 million and 5 contracts on a short here may say, well, I'm willing to wait it out because it's only, $600 and I have $1 million or whatever it is. But a guy who's got $100,000 and he's got $6,000 or $7,000 wrapped up in a trade, that's 6-7% of your capital. You don't want to just blitz that. Thoughts on GC and GDX? Fabulous move so far. Where are we going? This stream is for the SPY, but I have a 345 target for gold, GLD. We have our fund, so it's called EK Wax down here. We got in this last April 2024, and it was about 49. And right now we're at 112. So we put our retirements in here. My group did anyway, or at least I told them to. I don't know, whoever did. But it was at 49 when we got in, and we're up over 130% on our retirement in just over a year. So we have more than, I'm ecstatic. It's been amazing running gold and metals and stuff. EK Wax is a metals fund. So we have done extraordinarily well on the gold move. But 345 is my next target. That's where I'll start to look for reactions. And even in this area, they've hit a fib. I went over that, but yeah. Just because I'm a receipts kind of person. We might. I don't love it. We might get a buy here. If we do, I'm not going to be excited about it, but I trust the indicator and we'll do what we got to do. It'll be close. The reason it's close is because, okay, we probably won't get a buy then. NQ is still in a sell, and ES was teetering on being in sell or buy. But you can see now it just flashed a sell stop there. And so it's teetering. It's very close. It depends on how this bar closes. But I'm suspecting, based on what it looks like right now, we will not get a buy signal here. We'll get a stop, which was what we're seeing. Oh, I know what I was doing. I was like, I had some reason for something. I need to open a layout. And we want to open metals in a new tab. So this is the EK Wax chart. And April of 24 is right here. So right here is 49.30. The close of the month of April was 49.36. We got in somewhere in April. I don't remember exactly where. I was around 49 though. I don't remember the exact day is what I'm saying. I could go look it up. But anyway, 49, and you can see since we've been in, we're up at 113 now, or 112.65, but as high as 113. These are the kind of things that happen in my room. So day trading is great, swing trading is great, but if you wanted your retirement to go up a considerable amount, you could have also done that in my room by getting into metals. A lot of people stayed with the S&P because I said until support broke, you're safe, and they have stayed with it. And we're at all-time highs there, but metals have outperformed so badly that, and I thought they would. That's why we moved. I thought there was high risk in the S&P and high reward in metals, and that's where we went. So those are the types of things we do in our room to protect ourselves and go from there. So we just hit new all-time highs there on the SPY. ADD and VOLT are both starting to turn red as the market is moving up here. So that's a positive sign for the bears. Not that we're at new all-time highs, but that at new all-time highs you're starting to see rejection on the ADD and VOLT. That usually tells you if it follows through. It's only a small rejection so far. You want to see it start to really kind of sink. But if it follows through, that usually tells you that to the downside, that if you have red ADD and red VOLT while the market is moving up, that usually tells you a reversal is coming. Whether that reversal is a full-on drop it out of the sky reversal or just a pullback that you can make money on, either way, it's good for trading. But that's kind of the indication you see when you see ADD and VOLT start to turn down when the market's moving up. It's kind of the belt in your engine having 3/4 of a crack in it. As you hit the gas pedal, you're pushing more and more on it, and then eventually that belt's going to break and your engine's going to stop. I believe thanks to you guys, because I know zero about cars, that big one's called the serpentine belt. I've had that break on me before, and then it makes all of your dashboard lights come on. That's kind of a scary situation if you don't know anything about cars. I know less than zero about cars. I have a buddy who restored a 65 Bronco or something. I don't know. Some year of Bronco that's neat, I guess, to car people. And he's telling me what he put in it. And I'm like, man, you might as well be speaking Chinese. I got nothing here. I don't even know what the hell you're talking about, but I'm going to tell you good job because I like you and you're my friend and you seem interested and happy about it. But I have no supporting conversation for you. I'm just going to go, cool. That's all I got for you. So I said before the open, I would expect us in regular trading hours to challenge this high. It looks like that's what they want to do here, at least on the ES. We'll see if the NASDAQ wants to catch up and do that as well. I'm going to go look at the Qs real quick and see where they're at. Qs lagging off their high, so they may or may not go challenge this pre-market high. They were right at the 21 and testing it while ES is making highs. So this is a perfect place for them to turn. ES just made all-time highs. If they can find a resistance zone and then NASDAQ turn off the 21 there would be ideal. Otherwise, NASDAQ's going to want to catch up and push ES to higher highs. 586.20, if you want to know on the Qs, is the one-day max. So there's room above on the Qs. Sean, you were talking before. There's also put support at 647. It's just a wide range day. You have volatility because of the PPI. I do think you might see a little catch up here from NASDAQ. The only reason is they got within 20 points of their all-time high or something. Yeah, 24 points of their all-time high. So a spike up to grab that all-time high would not be crazy. Usually when they get that close, they want to go tag it real quick, but certainly don't have to do that. Markets are very out of sync right now. NASDAQ is still pushing down and in a sell. ES is green and at its all-time highs, or at least SPY is at its all-time highs. I don't think ES has hit there yet. SPX at its all-time high. SPX has 65.60 as a key level, so keep that in mind. They're only 8 points below that, and we just rejected an area. So this should be a little bit of resistance around the board. Guys, if you aren't in my rooms and you count on YouTube for things, I realize that there have been almost no videos lately. It has been a whirlwind of a month. I'll say that. At a minimum, a whirlwind. We lost my my wife's grandpa. We lost my dad. We lost 3 dogs. We are traveling. We were going to move to Washington. A lot of family things happened after my dad died that we decided we want to be in Kentucky. So we were moving from Vegas to Washington, now Washington to Vegas. We're almost there. We get there tomorrow or Friday. And then next week, we are finally done traveling. We are finally done with all this shit. And things will start to get back to normal. I know it's been a large fall off in content from me, but I will make up for that with other content that I'll be releasing. So be on the lookout for that stuff. It's just been one thing after another. It's been a hard few months. I'd like to see IWM hit an all-time high before the big rollover. That's very possible. A lot of times you see the last stages of a market are the small caps blow the top off. So that is very possible. We could stretch out a little bit more. ES and NQ are just incredibly stretched. So you could see some rotation out of them and into the small caps for a few weeks that cause some consolidation on the ES and NQ and breakout on the RTY. But RTY has been weak for a long time and really has never been able to recapture key levels yet. So until it does, it is in a large correction. Market being stingy and giving us a trade. Yeah, I mean, it's out of sync right now. I mean, NASDAQ went down, ES went up, and until they can sync back up, you don't want to trade. I mean, to be quite honest, and this is great. This is the reason that the indicator looks at all the markets. This is not tradable. I mean, unless you're doing like an iron condor or something like that where you don't want the market to move. But in general, that's not all we would be doing is getting chopped up there. And so this is a good thing that the indicator is keeping us out of the market. It makes for a boring day, but it saves you money. So the Mag 7 starting to change a little. Google now green. Microsoft has turned pretty solidly green. You're seeing, this is why you're seeing some of the bounce you're seeing on both ES and NQ, because the Mag 7 is lightening up, allowing the market to stretch out. I'm hoping they can sync up and ES can or NQ can catch up and we can get a trade off of the 1 day max area. That 655 zone, that's where I'll be looking for hopefully rejection. If they can get that, obviously that's a good place to look for a reversal back down towards 653. And then we'll see what happens if they can get down there. So yesterday you had chop, but it was big enough to get trades. And this, obviously could have been a trade, but NQ is just not on board. But yesterday, if we look at yesterday's trading, it was a pretty choppy day, but this was a win, very small. 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 And this was a win, very small. So we had 5 winners yesterday, no losers, but they were just all, it was choppy. It was good. We made money. We made, about $2,000, I think, a little over. But it was no runners, all just small wins, which they add up. Those things are good. Wins are wins, no matter what. If every trade was a 10-cent winner, you would be a millionaire really quick. J to the B, welcome to the stream. Condolences all around for your family. Thank you. It's been one thing after another, that's for sure. But with every end comes new beginnings. So we're excited to be in Kentucky, and we're excited for to be close to family. Since I've been married, since I've had a kid or kids, we've never lived next to family. We've visited for fair amounts of time, but never lived next to family. So it's going to be nice to live where we have aunts and uncles and cousins and brothers and sisters and friends and people that want to, be around the family and be around the kids, and they've missed that kind of part of their life. Every time we visit for any amount of time, my daughter's very emotional about leaving and wants to stay and be part of living next to family. So we're gonna do that for her and Lincoln, make them happier kids and make our family happier, make us happier. Big support system. So well, the issue we're gonna have here, maybe we'll see, is that Nasdaq is digging out from a hole. So we need this buy cycle to extend a few more bars on ES, and then before it turns down, so that Nasdaq can kind of catch up and get into a buy cycle. Because right now it's doing a weakening sell cycle. All right, a little bit of weakening here out of the ES. Let's see who's telling the truth. The Nasdaq's been down around support most of the morning. ES bounced off of support and is back at the highs. So let's do this. This should be a good sign of who's telling the truth. ES back testing the 8 there. That's the red line on the screen that it just basically touched. That is a momentum moving average. As long as they're above that on any chart, momentum is in that direction. Or if they're below it, momentum is down. Well, that's depending. So when the 8 is above the 21 and price is above the 8, that is momentum up. When 8 is below the 21 and price is below the 8, that is momentum down. If price is below the 21 and the 8 is above the 21, then it's kind of mixed at that point, or vice versa. So you want price and the 8 to be in the same direction above or below the 21. If they are, that's generally momentum indication, and they'll back test it quite often and continue, and as long as they hold, momentum remains to the upside. Jacob, do you still have a put swing? We do. We got a weekly swing sell 2 weeks ago. We took profit on a third of it on the initial move down. We took about $4 profit, and obviously they've moved back up here to highs. We haven't got a swing stop yet, so until we get that, we'll hang in there. I think that one, you have a lot of things in the favor of the bears, although we are at all-time highs, so that is not one of the things in the favor of the bears. But you do have seasonality. This is the worst month of the year for trading. You have an exhausted market. You have sell signals on quite a few of the Mag 7. So you do have weakening signs of weakness across the market, but they have not come to fully show themselves yet. But that's why weekly swings, you want to be out 3 to 6 months. If you go back, so we are not in danger of getting a trade here. So let's go to the weekly, and we'll look at Christmas. Christmas is a great indication of how weekly trades work, or let me say how they can work, not how they do work. And we may get a sell stop. We may get stopped out on this trade. That happens. Things happen like that. But we did take profit on part of it already because we got the sell right here at 643. They dropped it all the way down to 634. And like I said, we took about a $4 profit. But if you look at Christmas, you got the sell right here in January. I'm sorry, Christmas, December. Let's learn our months. And you got that sell price at $5.94. They immediately ripped it down to $5.75, so you could have taken a profit there. But then they bounced it back to new all-time highs up here at $6.13. So you were in at $5.95. They took it back up to $6.13, and then they dropped it off the cliff all the way down to, keep going, $4.82. So you got in at $5.95. They brought it all the way down to $4.82, but you had to be patient. This is why you take 3 minimum. I prefer about 6 months on most trades. On this one, I did take 3. The reason is September and October seasonally are terrible, and December and November start to get better. So I took it out to December. I guess that's August, September, October, November, December. 4 months, sorry. I took 4 months to give it time. You don't want to have it drop and be at the price right as you're expiring. You want to give it time to get there. And so having a choppy market while it sells is not uncommon. And then after that sell, you got this buy right here at 567, and they took it, well, to 654. Well, you would have been out here because of the sell, so 644. So what would I say that was, 557 to 644? 567 to 644. So 33 and 44, 70 points straight up. So you just got to, sometimes you get it like this. I mean, even this one, you got the buy signal here at 566, and they brought it back down to 555, so 11 points in the wrong direction. Hit the 8, held, and ripped it, changed momentum here. And then you can see they back tested the 8 several times on the way up and continue to hold, and until that breaks, they will stay above it. If that does break, we're looking at 620 next. Which part of Kentucky? Northern Kentucky, up by Cincinnati. I grew up in Fort Mitchell. So what I do like about this move up is we are still seeing a little weakness in the ADD. Vold is kind of flattening. It hasn't really moved down. It was down for a second. Now it's kind of flat. But you are seeing a weak move up out of the NQ, setting up for kind of a drop. And you're seeing new all-time highs on the ES, which can set up for a drop as well. So hopefully we hit a level here that gives us that NQ can move into a sell cycle or buy cycle, so we can get a sell signal. And then we'll see how it goes from there. But it would not shock me to see 654.80 tagged here, or even 655, which is the one-day max on ES and SPY as they move up. That would not shock me to see that hit first, and that would bring NQ along as well. All right, getting another back test of the 8 here on the SPY. See if they can break through. If they do and they push, guys, we just aren't going to get a sell signal. The NASDAQ has not been on board with any buying. ES made a new all-time high. NASDAQ did not. ES made a new all-time high. NASDAQ did not. And then they've sold off since there. And then SPY has gone back and made a high here. So NQ just not on board yet with the buying. So they never got into a buy cycle, which is how you get a sell signal. Long story short, we're probably not going to get a sell here. However, I will let you know when ES enters a sell, so that if you are aggressive, you can take a short. I will not. I follow the rules because the rules deliver money to me on a regular basis. But I know some of you like different things, so I will let you know if and when they hit that number. Taxes will be lower than Ohio. Cost of living is just lower overall in Kentucky from where I was. Even Vegas, Washington especially. Washington gas prices. FYI, ES just went sell. So if you are aggressive and want to try to short here, be my guest. Again, I will not be. I trade the rules, and right now we don't have a sell on the chart, so I won't be taking it. But if you want to, I just wanted to alert you that ES went sell there. But you won't see it on the chart because it's not in conjunction, unless you switch everything to ES, then you would. But it's not in conjunction with the NQ. Driving across Montana, South Dakota and stuff, gas was like $2.70, $2.60 was great. That's way better than the $5 we were paying in Washington. Half price gas is nice. Washington doesn't have a quote-unquote state tax. They just get you in a lot of other ways that are super sweet. Williamstown says, just follow the rules. Could be a great opportunity to watch a move down that we are not a part of. That is part of trading, and the sooner you can accept that, the better you will be. That's a fact. That is a fact. There are just times you don't get every move, and that's okay. There's nothing wrong with that. Nobody's perfect. And the cool thing about the stock market is it's open like almost every day, almost all day. So there's always another trade. There's always another place. There's always another stock. There's always another thing you can find that's a better setup than trying to take a mediocre setup. All right, they've broken the 8, which means they're going to touch the 21 or test the 21, which they've already done. Right here at 653.79. Then VWAP is next. If they get through VWAP, very likely we're going to test 653 again. So VWAP will be the key. That is about roughly 653.70. They get through that, then you should expect a little bit of acceleration back down into that 653 area. And then we'll see how they react there. I will say for the bulls, this has been lackluster. They had a 652.40 to 654.80, so $2.50 move on PMI. I'm sorry, PPI. They had a $2.40 move on PPI. Had every opportunity to be in blue sky territory and just run this out, and they have not been able to yet. So this is not what I would call a banner performance from the bulls, given the overall setup that they had to break out and go and race. Now they may be saying, hey, we made new all-time highs and we'll consolidate, and tomorrow we race on CPI. That's certainly a possibility. But today, it is not what I would call a super strong open by the bulls. Certainly a long way to go today. They can fix that, but overall. You get what I'm saying, I hope. There's the full test of the 21 moving average. Now we'll look at VWAP next. They're basically right on top of each other, coming right into that. Very, very rarely do they spike through these and not return, so watch for a little bounce here, back above them. But if they do and they continue, that's a sign of strength from the bears. ADD is sinking a little more. Volt is sinking, so you are seeing some bearish follow through around the supporting evidence. Let's see where RTY is right now. RTY is still hanging in there. It's about 1/3% up, about on par with everything else. Transports have turned red. Dow has turned red. Banks have turned red. So we are seeing some supporting evidence that some selling can enter the market here. They spiked down. If you took that short, good job. That's probably a winner. So good job on that trade. You should have already taken some profit, I believe. I'm just guesstimating that based on the move. As I said, very rarely do they spike directly through these. You're already seeing the bounce back up to VWAP. Closing this candle here, this 30-second candle below, is a good start if they can do that. However, more often than not, you're going to see a little bounce here, even if they close below. Even if they close below on this bar, you'll probably see a green bar next, unless, again, there's some real force behind this move. Let me bring in the volume so we can see. Yeah, it's a little more volume. Nothing off the high, not much. So nothing crazy there. Here's your green bar that I was talking about. Doesn't mean this bar is going to stay green, but it's definitely going to back test the 21 and come back up. Like I said, they don't just spike through these things without bouncing a little bit. You got to understand price action, and that's exactly what we're seeing here is price action. They got through them both. They closed below them both, but now the bulls are definitely going to back test that. They want to make sure, or they want to see if they can push this back to the highs, and they might. If they get back above the 8, that'll be a strong rejection from the bulls, or a strong counter from the bulls. If they don't, then we can see it sink. But here's the green bar we were looking for to get back above the 21 and VWAP. And this is, since we aren't getting trades, guys, we might as well learn price action. This is how price action works. There are key levels. There are key areas. They came down, spiked it below, and then they came back up. So when they get to the 21 and VWAP, yeah, they can come down all the way down to here. That was a big drop. But when they closed, they were still next to it, and the very next candle spiked above it to give you your retest, then lower. Then they retested it again, then they got above it. When they got above it, they came back down and tested it, and then they finally moved and got through it. So understand that these levels, the reason they're on the chart is they're always important. You are always going to see reaction. Right there off the 8, you just saw the price drop. They tagged the 8, and price snapped back down to the 21. These levels are extremely important. The guys, the algorithms, the people, the money, the billionaires all know where they are, and they all trade them. What wave count do you have here? So I do bigger wave counts. Getting into the weeds gets a little tiresome because they change so often. But for now, we have this as an ending diagonal type structure. I don't love it. I could even count this as 3 here, and this is 4. That makes it feel a little better. So you'd have 1, 2, and this is A, B, C, and 3, and then 4 and 5. 3 is always your longest wave and strongest and biggest. So that's probably more accurate, but this is kind of how I'd view it currently. And this is a diagonal. So when you say, oh, 4 is in wave 1 territory, yes, I know. This is a diagonal, as you can see. So they backtested the 8, made a new low here. We'll see if they can follow through. This will be the key for the bears. They have the door open. They can walk right through it. They are below VWAP. They closed below VWAP. All they have to do is walk through the door. It's right in front of them. Remember that if everybody's talking about something, it's hard for it to happen because they're playing it in the market. So how can they fix that? Well, everybody's talking about this being a topping area in the market and this being a um, seasonally terrible time of year. Obviously, September is the worst month of the year. Everybody's looking for at least some sort of pullback. So when PPI comes, where is the leverage? Well, generally, it's going to be short. We're at all-time highs essentially. You have seasonality. You have a lot of things in the favor of the bears. So what do? They come out on PPI and they rip it to all-time highs. This destroys all the shorts, makes them close their position. Then when everybody flips long, they flip it on them and they start to do this. And this is how they create liquidity. We talked about this yesterday on my midday call. But they have to be able to switch the market perspective or emotion, even in the short term. And every time they hit a new all-time high, that tells people, oh, wait, the bear market isn't here. The bull market isn't over. We are still pressing higher. I do still need to buy. And so then they get them on board with buying, and then they sell it out from under them, create liquidity, get guys to go short again, and then run the cycle all over again. It's all a bunch of tricks and traps, and that's all the market is. Everybody thinks that the numbers matter, and in the big picture, in the macro picture, they definitely matter. Please understand that. Numbers do matter to the economy. That's how somehow we were able to know that inflation was coming, even though Jerome Powell couldn't figure that out. Anyway, point being, numbers matter, but not in the short term. In the short term, it's all about psyche, emotion, FOMO, and FOLI. Fear of losing everything, fear of missing out. And welcome to the stream, SD. That was a long-winded answer there. That got off track. Now in the next bar or two, it doesn't have to be this bar. You're going to want to see the bears accelerate. You're going to want to see them take out the low they just made. Otherwise, they're trying to put in a little bottoming candle and push back up to the pre-market high. So you're going to want to see the bears accelerate down below this low and into the 653 area to see what happens next. Otherwise, if they get back above this 8 and this high they just made, we're very likely going to test that pre-market high area. Unfortunately, no blood today. No money, no blood, no nothing. Just sideways trading where the markets are out of sync. We haven't had any trades today. That happens. NASDAQ has not been on board with any buying after the open, and ES hasn't really been on board with selling, and they're not in sync. They're still not in sync, really, but they're getting closer to it. If they sell a little more here, they can both get into a sell cycle. But mostly we've just been learning today, and hopefully you guys have learned something. If you have, please hit the like button. It helps me spread the word. My reach is a little low on YouTube right now because I haven't put out any videos. That's a me problem, but those will all come back. Nothing has happened in my room, guys. I'm still in my room every day. So if you sign up for that, you do get the updates every single day. You get the trades every single day. You get all of this. But the daily videos for the general public have had to be sacrificed just because of family issues. So hit the like button. I would appreciate it. Subscribe to the channel if you haven't already. Share, comment, do all those things. All those help me a lot, and I appreciate it. So if you learned something and you felt I helped you, if you wouldn't mind doing that one little thing, that'd be great. Don't forget you can get the indicator, which was 5 for 5 yesterday. Was phenomenal last week. Not great on Monday, but made up for that yesterday. So bears tried to accelerate, failed. Bulls tried to break out, failed. So now we have indecision. Now we have dojis. So until one of those levels breaks, we're going to do this, and markets are just going to sit sideways. Again, back above this high, very likely we press on this candle here. Back up below this low, very likely we press on 653. NQ's been grinding sideways. We'll go look at it real quick here. So NQ broke below the PMI spike, or PP. Why do I keep saying PMI? PPI spike. So they had this low here. They broke below it, came down really close to yesterday's high, and kind of held there. Let's see what other support they had there. Okay, I see. Decent support area. They just didn't come all the way down to test the low. You had all of this support right here. So anyway, it's been grinding higher here in kind of a overlapping pattern. And let's see what we're at as far as the retrace goes. They're right at the 618, so this is a perfect place for them to try to stop and turn down. Back over 24.010 tells us they're likely going to push toward the high again. But right now they're at the 618 retrace, which is a perfect retrace area. And they have now moved into a buy cycle. You can see the sell stop here finally came through. The ES needs to have a little bit of a bullish bar here because it's still in its sell cycle from earlier that I told you about. Oops. So still not going to get a short signal yet, but if we can get a little bit more of a bounce here, we might be able to convert ES, and then we could see a short after that. But we would need some green bar here, probably back up into this 654 area. Something that traps a little bit. These gap ups mess up day trading. I mean, we have a gap up or down almost every day, whether it's big or small. And it's, a lot of gap ups and gap downs lead to trend days. Typically, if you get a choppy gap day, that's a great day trading day. But because the NASDAQ and ES have not been in sync, it's been tougher. ES rejecting the 8 again. The 8 is proving to be the level. You can see they rejected it here, 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 and here. So we'll see if they can get back above that. That's going to be what kind of pushes this market to the upside if they're going to go up. ADD still dropping. It went from positive 100 up to 750. Now it's back down to about a positive 268. So it's still dropping down. It's dropped about 500 delta. Um, Vold is still dropping as well. So we're still seeing weakness on the broader scale. RTY is almost flat now. So we need to keep an eye on that because if it goes red, that's an indication of weakness overall. Mag 7 still, wrong way. Mag 7 still overall having a tough day. But Nvidia's just crushing. They're up almost 5%. That's a big swing right there from the biggest stock. So that helps a lot. And Microsoft being one of the next biggest stocks is also up almost 1%. So those two alone are keeping this market afloat, or up, if you will. Since Amazon and Apple are taking a bath. No synchronicity today, and it's showing on the chart. Just an ugly day. There's been one decent move to the upside. But other than that, not a whole lot to trade. Oracle's 40% up. Yeah, they must have, I don't know. I mean, you said they announced something earlier. I have no idea what it was, but clearly that news affected the stock. I'm guessing they were in some version of a wave 3. Oracle's a big one too, so them being up 40% is probably another portion of the market that is keeping us afloat. All right, Bears making another run at it. We'll see if they can break that prior low there. If they can, then 653 is the likely next target. And then we'll see how they react there. I'd expect at least a bounce. And then, we'll see from that point. Hundreds of billions in long-term orders for data centers. Oh, there you go. Who knew that the billions and billions of dollars out there were in data? Selling, mining, stealing. Basically just be a Facebook and Google and everybody in Apple have all turned your phones into a fly on the wall in every room so that they can track you and, as they would say, give you ads you want to see. I don't want to see any ads ever. I know what I want. I'll just go get it. But you can't tell me that you haven't been sitting in your room and talked about a product, and then all of a sudden on your Facebook feed that product has 17 ads on there. Because that definitely has happened. Social networks, they are the devil that will kill us all. All right, pressing on that low here. 653.45. Looking for them to break down. Should they break down, 653 is our next target. Google knows everything I punch into my phone. They are in cahoots for sure. That is a fact. Yeah, I bet you if you went into the Google mainframe and typed in your name, they have a whole file on you. All right, pushing through here. They got a spike below. Let's see if they can follow through. 653 again. Next area of major support. It is our call wall of the day. It has been supported 1, 2, 3, 4, 5, 6 times already. So if they come down and fail, we should see a little acceleration down to that 652.30 area, which is the PPI spike zone on the ES. ADD down to 193 positive now, still sinking. Vold still sinking. Beware here if you're long. Use stops. Oh, if we can, almost. If we can get a green bar that closes just above the 8 on the SPY here, then both, we will be back into a in sync market. Right now it's Backstreet Boys. Or maybe 98 degrees, who knows? Nah, it's not a hot market. We'll go Backstreet Boys. I guess more accurately, it's a one direction market. Straight up. Are you anticipating a long trade? Actually, a short. Nasdaq is in a buy cycle right now because it has not really dropped like ES has. It's mostly gone sideways, and so it's worked its way into a buy cycle. ES is close, so they're in a weakening buy cycle. But if you get a spike up here, a quick bounce, that can give them enough strength to give us a sell. But that would be what I'd be looking for, is ES to bounce here a little bit and then a sell signal after that, which would be interesting, I think. They're going to reject, it looks like. We'll see. Hopefully they give us one spike and then rejection. That would be great. Perfect. All right, ball is in the Bears' court now. They've closed consecutively below all the moving averages and the VWAP, so they have the ability to drive this down. We'd like to see acceleration from the Bears down toward 653. If they continue to just kind of slowly chop down into that level, then a bounce becomes most likely. Not well, I shouldn't say that. Not necessarily. In general, quick moves get bounced, whether up or down. So if they are flying into a key level, like just straight up, and it's flying, you would expect a rejection. If they get up here a little short and then they kind of grind their way in, you still expect a rejection, but then you expect them to kind of blow through. So you want to see the Bears break support with some authority. So you do want to see some speed here. It's kind of a little catch-22 on this particular instance. They've already tested it 1, 2, 3, 4, 5, 6 times. So you'd like to see them kind of accelerate and just blow through. They don't need to test and bounce again. You now have the 8 below the 21 and 2 back tests of the 8 that have held. So momentum is starting to build to the downside. The ADD and Volt are still dropping. The NASDAQ is still holding the 618 area. Now you look for them to step on the gas if they're going to follow through. We are in territory now of a failed breakout. So they set the pre-market high, they came up to the pre-market high and failed off of it, and they've gotten back below VWAP. So this can be a failed breakout, which would target the pre-market low, 651.28, or the actual pre-market low, which comes in all the way down here at 650. I would say this call resistance down here at 650. You could see a very, very strong rejection from up here if they start to get the momentum going. There's the acceleration we were looking for. So they hit the gas pedal on the short term, in the 1 5-minute bar. Now we're looking for them to test 53, which they got down to 16. So they got down in the area. Now they have to actually follow through that area. And here's a spot where you want them to kind of move through fairly quick, a couple of bars. The longer they sit here after holding it 6 times, the more likely they're going to try to jam it back up in a squeeze. So you really want to see them follow through to the downside here. They don't have to break through and go like they got to get all the way down there in like a bar or anything, but they need to not do what they're doing right now, is what I'll say. So like in the next 2 or 3 bars, you'd like to see them below 553 or 653, excuse me. How much weight do you give to price action going below the open in this situation? Are you talking about the opening print? And welcome to the stream. I love the name, Cake Jiggler. Say it every week. Okay. So the question is, how much weight do you give price action going below the opening print, which the opening print is right here at 653.63. And what happens there is it's a psychological change more than anything else. It's a price action change. You get a break of the level as well as the moving averages happen to be there at the time too. But more than anything, it's a psychological change because where the open is where the bar is green. But if I go to the daily chart right now, you have a red bar even though we're green, right? So now what you have is a psychological, are we building a reversal candle? So people start to get worried. They start to look for levels to break. And then if they get the right volume and push down, momentum builds and we start to see supports break and we start to see, we start to see them break through some key levels because of the psychological change, especially off of an all-time high. Now it's different when you get this in like the middle of a chart. So if they did it down here, same thing. You're still looking at a psychological change, but off an all-time high. Reversal candles are always what people are looking for. So it becomes more of a fear factor of, is the market going to start giving us, this kind of spike up, push down, and then depending on where we close, maybe an island reversal or maybe something else is going to happen. But it's definitely, I don't necessarily weight it any different, but it's definitely a psychological factor for sure. I think the other key levels are more important overall, but that starts to give you a bearish feel in the market, even though it's green. Even though, I should say, it gives you a bearish feel because you have a red bar, even though the market is green. Anytime you break up and then break back below the open, that is a start of a red flag or a warning. Then you have to see how they react at first support, which in this case is 653. If they get through that, then it starts to become more likely we're going to try to close the gap. Then it starts to become more likely we're going to try to close down to the pre-market low, and so on and so forth. Still seeing dropping across the board. On the background is RTY red. RTY is now red. So this core group, this is what I call the supporting evidence group. Red, 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 and red. When the supporting evidence is red but the markets are green, that's a warning to the bulls. Now, we are at support and they're not deathly red. They're basically flat here. The Dow's down about 0.75%. But the transports are down pretty good and the banks are down pretty good. So this is a red flag warning sign right here. They're pressing on support. They tagged and got through 653 here. That was our target. Now we'll see what happens on the reaction. You really don't want to see them bounce too much here. You want to see, like I said, we've already tested this 6 times. Now you're coming back to test it again. You'd really like to see them hold down here around the 653 area, which it looks like they're trying to do, and then push on through. Off topic, they just said Oracle founder beats Musk as richest man from the current $1 billion gain. $1 billion gain overnight. That's a silly thing. You don't realize how much a billion is till you do the math of like how many dollars you have to make for a year to make $1 billion. And they just did that in a day. It's crazy. So this close is pretty good. This bounce is not terrible. I mean, they can bounce and test the 8, even the 21. I'd like to see them accelerate a little more here and get on through. But this close was pretty good on this candle. Now the bears have to continue to follow through with what they are trying to do here. Very often those big gains like Oracle just hit, get sold back into. Maybe not tomorrow. I mean, it may take a few days for that for the momentum to slow down, but those kind of moves tend to get sold back into. And if that happens and the Mag 7 continues to struggle like they are today, and Nvidia can even out a little bit, CPI could be a red day tomorrow. And that would be that is my expectation, and just based on Elliott wave counts and where we're at in resistance, overall market trend, that type of stuff. And when I say market trend, I realize it's a bull market. I don't mean that the market trend is down. I mean that the overall market trend has been a diagonal, and those sell off pretty quickly, and you have some evidence to show that it's possible we see continuation of that sell-off. But you want to see today be a decent reversal, at least a gap close, kind of flat day. That would be a very big win for the bears. My card keeps getting declined. Can't pay for the indicator. You might want to talk to your bank. I don't know. I mean, I can't. Are you? Let me hold on. Let me go to Stripe, and I'll try not to do it on the main screen because that would be silly. Let me see if there's a code. Remember, if you were short, this is the first target. You should have taken some profit at 653. Remember, guys, I know we're not trading today, unfortunately. Not by choice. We just haven't got any trade indications yet. But if you are liking what you're learning and the price action training, I mean, we've been pretty spot on with price action, I think, today. Hopefully you've learned something. If you haven't, I'm sorry. I tried. If you have, hit that like button, please. Subscribe to the channel. We do it all the time. Let's go to transactions over here. Cyber is your, I think, first name Zaki. Or last name. One of your names Zaki? Cyber. Oh, last. Okay, perfect. So it's saying that you need to contact the bank. In those cases, the bank probably thinks it's fraud or something, so you need to call them and make sure they know it's you doing the transaction. But that's what it says here: is you just need to contact your bank. That's super annoying. I have that problem with my bank a lot. They think if I buy Subway, it's fraud. Can't use crypto, although I probably should allow that because might as well click some on that. Can't use crypto, but you can use PayPal or something like that, which might allow you to convert crypto. I'm not sure. If you want to try PayPal instead. All right, guys, that's a jump down testing the low of the day here. Let's see if they push through. If they push through, the black line is our next target right here, 652.36. If they push through that, the pre-market low, 651.28, comes into play next. So watch for acceleration here. This can get, if they blow through this black line, this can get nasty to the downside. ADD again dropping, NASDAQ dropping now. NASDAQ has moved into a sell. We'll see if they can follow through. But this would be the area I would expect. Is the NQ back to well, we're way too zoomed out on this one. So the NQ turning down, but still not back below the spike here. But the fact that they did spike through it shows already weakness. That they came back and broke this level immediately shows weakness. So we could see the NQ. It's at VWAP right now. NQ's got to get through VWAP, and then we'll see acceleration out of the NQ, probably back into this 23.9 area. And we'll go from there on that. How's overall volume today in comparison? Volume looks pretty good today. The average volume bar is higher than yesterday's average volume bar. So certainly not, I don't think, right home volume, anything to write home about yet. We'll see how the daily volume closes. But if we're going to get a reversal off a high, you'd like to see some amount of volume come in. Otherwise, it can be a local. Keep in mind, it doesn't have to be the greatest volume of all time. I believe, if I'm not mistaken, that the volume didn't come in January of 22 until like the lower high came in. Let's go actually look at that on the daily. Since we can't get any trades going today, huge reversal candle building. The daily volume, we're still early in the day, so we'll see how that comes out. But if we go back to 2022. Right here somewhere. Oops. Oh, I don't know where I'm going. We are down quite a ways from this in 2022. We're in the 400s. Maybe so the high was back here. And you can see that the volume was decent on the high, but the real volume came in on the lower high. So you can see the big volume spike was right on this lower high right here, and then they brought it down, and then that's when things got ugly. So you don't have to have huge volume on the high. In fact, there was pretty low volume on this high. Leading into that, there was some volume, and coming out of it, there was volume, but the high itself did not have great volume. So keep that in mind. You don't have to have blow it out of the water volume at the exact high. You can have it a day or two later when they really start to follow through and break support. Because at the high, all you're doing is reversing, and generally at the all-time high, you don't have a whole bunch of people wanting to buy there. So you can move the market down without a ton of volume. Now, when they get the big volume is when the buyers come back in with the intent to push it back to highs. And then there's a big battle, and the bears win that big battle of big volume, and that's when the market changes. So just because there's no volume or low volume on an all-time high doesn't mean that that's not going to be the all-time high print for a while. It simply means that it was easy to move price down without a bunch of volume. All right, coming into our black line here. Uh-oh, we were, and then I moved it. Which is through the call wall that we hit. 653 was the call wall. Now they're coming into our next line of support. You can see they're bouncing it right there. Draw this. There we go, straight. They're just above it. And then there's another level of support down here at 651.87, but at that point I'm looking at 651 to hit. If not, gap close down here at 650, even down to as low as 649 and change. So watch for this reversal to continue if they break below this black line. But given that they failed to break out, typically you're going to see at least the overnight low, and that's going to be down here at a gap close. Since we aren't trading, let's ask a question. Has anybody learned anything today? Has there been any useful information for you guys out there? I hope so. I don't want these streams to be only trades and no information. Trying to give you everything I have on the price action as it happens. The interplay of the EMA 8 versus 21 was good. Thank you. That's a good one to know. How they create. You can see the momentum change. They came down, bounced it, came down, back tested it. The 8 crossed, and as soon as the 8 crossed, they back tested a couple times, and momentum kicked in. So those are good levels to know, good moving averages to know. And that's something I picked up not that long ago. And that's what I say, guys, even though I've done this for 20 years and I do it professionally, I don't know everything about the stock market. I hone in on very specific things, and then people will present all kinds of information. And I know that a lot of that information is extremely useful, but I also know that I can't remember it all. So I keep my things. I use the KISS method. It's what I practice, what I preach. I keep it very simple, stupid, because if I have to remember 20 things while trading, I'm going to fail because it's just too much to remember and figure out and do in real time, especially when you're trying to day trade and make quick decisions. We have the indicator to help us with that, obviously with our entries and exits and things like that. But it's nice to know certain price action things so you can plan for better entries on your trades. Like if we're at a moving average, I know it's probably going to reject a little and give me a better entry price, things like that. So the 8 moving average is something that's very simple, easy to see on the screen. I don't have to think about it. I just know it's there and I know how it works. So it's easy for me to implement into my day. And those are things that to me are useful and make me a better trader. And I hope that you guys understand that while knowledge is power, too much knowledge is confusion. So focus in on what you're good at or what you feel good about. Trade that style and trade only that style. If you try to trade 50 different styles because you heard one guy made money doing it yesterday and then today it didn't work and then tomorrow it did, you're just going to get lost in the weeds and you're going to not execute the strategy the right way because you're just kind of hearing somebody talk about it and they're probably talking about it honestly wrong, or they're talking about it and leaving out gaps, or they're talking about it or leaving gaps in the information, leaving out critical points. So just remember, focus in on one thing, master it, and you will be so much happier as a trader. I learned from all your streams. It really improved my trading. That's awesome, Autumn Love. I appreciate you being here, and I appreciate that you're learning. For me, the best part is what you didn't say. We missed a pretty good winner, and you didn't dwell on what was missed. Psychology of trading is incredibly difficult. It is incredibly difficult. That is an fact, Williamstown. Missing trades, as soon as you get to the point where you understand that missing a trade is okay, that will save you so much stress. Like if you're watching a market today and you're like, why didn't we trade at 654.50 to the downside? Well, it was at all-time highs and we just didn't have it synced up and it didn't work out. Sometimes that happens. But if you're watching markets doing that, you're going to be in a very, very poor psychological state that's going to cause you to chase, that's going to cause you to revenge trade, that's going to cause you to double down, that's going to say you're going to see this momentum start and you're going to get short right here instead of getting long or not trading at all, which we're doing right now, not trading as a position. And they're going to bounce it and you're going to get ripped out, and you're going to be like, oh, this is, whatever. It's okay. Missing trades is okay. In fact, it's necessary. It is necessary to miss trades because in order to catch every trade, it means you're trying to take every single thing you see. And that's just not how trading works. If you try to do that, you're going to run out of money. You're going to fail way more often than you succeed, and you're just going to be miserable the whole time. So embrace the fact that you didn't have to stress out about a trade today, and you just got to hear me drone on about nonsense like boy bands and moving. So maybe my support line wasn't to the penny, but we were looking for a bounce at that 652 level, 652.45 level or so. And that's what we've seen. They're back testing the 8. We'll see if they can hold that. If they do and fail lower, then momentum continues. If they get above the 8, we'll see how they react at the 21 in VWAP. Let's stroll through the other charts here. Not really charts. I'm just going to see price. Let's see who's doing what here. NVIDIA still doing okay, but falling off a little. They were up to almost 5%, so they're down about 0.4% from where their high was. Meta continues to get hit a little bit. Microsoft coming back down a little bit. Netflix getting hit. Amazon getting hit. Apple getting hit. Tesla doing okay. Google's okay. Gold, 335. We're looking for 345 on gold, silver, up there at that 37, 33 zone we've been talking about for a long time if you've been in my rooms. Let's see, Bitcoin still holding that 110 level, critical level, that 110 to 107 area on Bitcoin. They keep testing it and bouncing. So one of two things is going to happen. Let me go over to my other chart, actually, because this is And ignore any sells or buys you see on there. Those are, remember, the indicator is not formatted for Bitcoin right now. So Bitcoin, if I come over here, we'll do that one because everybody likes Bitcoin. Real quick while we wait to see if we're going to get a trade at all. We may get a long. Bitcoin is what I was looking for. In my room, I've told everyone that this 110, actually it's 111.73 level down to 107. This whole area right here is critical. They spiked it. They've been battling it, and now they're pushing above it. So one of two things are going to happen is they push above it here. It's important because they got back above 113. They're either going to squeeze back to all-time highs in the 125 to 140 zone, which has been my target for quite a while. Or if they break this low, things can get real dicey on Bitcoin, and we could see them drop down to 99 quickly. And then if they can't hold there, that can be a lookout below moment on Bitcoin. You could see 77 in a hurry. Is this a trend day now, JG? Prabs, I believe you have access to the trend day video now. What level do we have to break for it to be a trend? To even start for it to look like a trend? I ask for learning purpose, not for to call you out. I want you to, as we ask questions and answer questions, we learn things better. So I'm not trying to call you out. I'm trying to ask questions so that you'll say it, and then the more times you hear it and say it, the better you'll get at it. Overnight low, correct. Good job. So the overnight low, which is down here, has not been broken. And this is not even the overnight low. This is the pre-market low. And the difference is the tool that I use for highs and lows tracks the pre-market low as the true yellow pre-market low, not the true overnight low, which is way down here at 650. But if they break 651, I would say coming down into this, breaking this 650 area personally, but technically, based on the rules, if they break this, back test the 21 and come back down and make a lower low, then it's a trend day. All right, back into support. They have now hit it to the penny. Actually, past the penny. They went a little lower. They back tested the 8 and made a new low. This is continuing momentum to the downside, but until they get out of the pre-market low, it's just still in the range. So it's still in the daily range, which is why it's not a trend. NQ is going to be the same parameters but different, and meaning that sometimes the NQ breaks first or doesn't, but I don't think they broke the overnight low at all. No, it's way down here at a minimum there. Pre-market low is 23,874 on NQ. They have not gotten there. So they're at the next support. This is the first psychological zone is always going to be the opening print. Getting below that, things start to get red on the screen. But this PPI launch, this is a big breakup candle. This is the market saying, we like this level, we bought this level. If they come back down now and fail that level, that is a big psychological switch, as well as a probably stops for a fair amount of longs. So if they can break through with some momentum, that will convert those stops into sells, which will cause more downside and more selling. So breaking down below this area would be a short-term win for the bears. All right, guys, I'm going to give them a chance to hold this low and give us a long. If they're going to hold anywhere for a long, this is going to be the spot. I'm going to give them a chance to hold here. If they break through, I'm going to go ahead and call it for the day. As I do think momentum will take us down probably to 650 and 21 next. And at that point, we could be getting into trend day, could take up into the call. And then, it's just been one of those days where trading hasn't been working out as far as not wins and losses. We have 0 trades. So there's just been no alignment in the markets, unfortunately. And when that happens, you don't get trades. So I'll give them a chance. Right now, we are in a sell cycle right now on both charts. So a long could be coming off of this level, especially is where I'd be looking, because they spiked 653, which is the call wall, and they come down to this support just below it. It's a great place to trap shorts and then take it back long. So if they do give us a call here, we will take it. And then if they don't and they break down below, that support will be done for the day. My hunch is that they will break this support, but they may spike it first back to the 21, come up here to like 653.22, and then take it down. I am sitting on a 654 call for those of you interested in what my strike price is. I'm sorry, 653 call. That was a mistake. 653 call. Now, because we're coming into the 8, should we get a buy signal right at the 8? Typically, I'm going to give it a second to kind of reject it because we're not always going to move through the 8 directly, but they did test it twice already. So I may give it a second and then just kind of go with it. But usually if you get a buy signal right here, they're going to give you a little bit of a pullback off of it. But we'll see how it goes. They're back testing 653 now, the zone we had before. The common failure point. They can spike it up to the 21 there and fail as well. But this is not clear sailing for the bulls just yet. It's our first back test of the 21 since the breakdown. So we will see how they react there as well. Stop run, liquidity bar there, potentially. They retraced the entire PPI spike, and so far they have held. That's a key area for them to hold for psychological reasons, as well as just a key buying area where you can see there's a ton of volume there. You would expect to bounce off of that level, and that's what we saw. Now the question is, can the bears reject that bounce and continue to follow through to the downside? All right, there's the test of the 21 and a small rejection so far. We'll see if they fully reject it or just pull back and then blow through it. NASDAQ not nearly as aggressive on this bounce, which is why we haven't got a buy signal yet. It is up. I mean, it has bounced, but it's not as aggressive as the ES. VWAP is the last backstop here. Remember, the Nasdaq did retrace its 618, so we could see something similar out of the ES. Where we at here? Right now we're at the 50% retrace, which is where VWAP is. So this will be an interesting area to see how they react in this zone. The 618 also heavily contested at 653.71. So if the bulls are going to, or the bears are going to try to follow through to the downside, they need to reject one of these two areas here. Still fighting with VWAP here, seeing if they can break down below the 21 again. If they do that, we can start to see them accelerate again back toward this low and see if they're going to put in a higher low. So we could see them higher low and then go, or go ahead and break down. If they can get back below the 21 here in the 8. We saw stabilization off the 0 level of the ADD. That can tend to suggest the bulls wanted to hold the ADD in a positive state. That's where you want to see support come in on the ADD. You don't want it to go red if you're a bear, or if you're a bull, I mean. So right now they held 0 delta, and seeing a little bit of uptick on that. We'll see if that holds here with this. If this is a bounce, then we'll see it obviously drop down below 0. Otherwise, we'll see it continue to extend higher. Is this also a test of gap up opens or down that levels are tested in the market hours? So yeah, I mean, if they would have got below here, I would have looked for a gap fill. This is the key area to watch, because this is when the overnight moved up, right? This move up here is generally less important than this one. And the reason is you can see that all the volume here didn't matter. The volume here mattered. This is where they said we are buying this level, and we are buying it hard. They bought it up 2.5 points. So they said they're buying it. They did buy it, and there you are. As price moves up, you see the heavy volume stick. So when they come back down to where this started, this is the buying area. That means people were left behind. That means there's buyers that want to buy this area, because if you look, when you see a spike like that, it moved too fast for everybody to get in. So there's huge chunks of money here, and portions of those huge chunks bought. When they came back, other portions of those huge chunks bought again. So let's say I tried to buy 1 million shares right here, and I was only able to get 500,000. That means 500,000 shares are sitting here for me to buy. And when it comes back down to that area, those 500,000 are going to engage and push. Okay, we got a buy signal here. We're going to go ahead and take it because they are pushing. It's 106 at 653. And our stop is going to be 653.10. And they are either going to stay above VWAP here and push up into this next 653.71 level and beyond, or reject here and fail VWAP and turn down. So hopefully we get the squeeze since we took the trade here, but I'll be honest, I don't love the positioning of the trade, and it's mostly because of the NASDAQ lagging that we got in so badly. The NASDAQ has been off all day, and that has caused the buy and sells to be non-existent until now. So this is our first trade of the day, and we'll see how it goes. But it's coming in at a not great point for the ES, so I'm not, or SPY, so I'm not loving this trade. I'll be quite honest with you. But the indicator is smarter than me. It sees volume flows and money flows and things that I don't necessarily see. And that's why I trust it and use it and follow the rules. Thank you for all that you do. You're very welcome, J to the B. Thank you for being here. I appreciate you guys. PML may be a nice buy if it holds. Yeah, that would be a good spot to look one. call options. Thought your wave count believes it's sort of a top. It does, but we're talking about short-term stuff. This is a 5-minute chart that we're on. Put a sloping support retest. Put at sloping support retest. Oh, I see what you're saying. You're welcome to trade anything you want. I trade the indicator because it's been spot on for over a year and a half. And, that doesn't mean every trade's a winner, but it does mean that it knows when and to get in and out more often than not. And so I just trade what I get there because all of the logic that you would use to trade is written into that indicator. So there's no sense in me trying to reinvent the logic when the logic's already there. Are ES and NQ out of sync still? That's why the indicator's not showing up as a buy. It's not that they were out of sync. It's that the NQ's move up was weak or weaker than ES's. So it took a while for NQ to get into the buy cycle. But obviously it did on this bar, and we'll see how it plays out. Can you do a big picture update on ES futures? I did a update at the beginning of the stream. If you want to rewind back to that, you can watch that. 65.80 area completion for 5 up. And the correction begin to the downside. It's possible. We take it all one step at a time. That's an area we would look for a top to be put in. Whether it's the top, I don't know. We have to wait and see support break. It's all about support and resistance, and we want to see those break. So when support breaks, we'll start, which is the April lows, we'll start to get more on board with the top being in and positioning for that and building our future around that. But until then, the bulls are in control of this market. Remember, you got to know your time frames. In the short term, this is a very, very bull market. Very bull market. In the long term, it's a bull market. But we are seeing things that cause weaknesses, things that cause drops start to materialize more and more and more. Until we see that on the bigger scale, though, it's a bull market, and there's no question about that, and there's no fighting that. I had to pop out. Are you thinking this buy should retest the daily highs now? Not necessarily. They're right in between the 0.5 and 618. I said I didn't love the positioning of this buy, honestly. Just from a general standpoint, the ES triggered long way back here, but NASDAQ was very slow to get on board, so a lot of the move on ES I'm not happy with being entered up here because we already got through into this next resistance zone. So this is a very highly suspect area to me. It's basically a decision point. If the bulls get through the 618 here and push, off we go. If they fail here and get back below the VWAP or the 21 and 8, then we're going to test these lows and probably break them. curious. I think if you put the extensions on here, we may see a 1.0 that's right around the pre-market low. 650, 160 pre-market low for the morning was 650, 128, so pretty close. We could be seeing a C wave down, potential for that, where this is an AB. So you have an A, B, C, like that. Again, not in love with this entry, but what are you going to do? You got to follow the rules, see if they hold. The entry on ES was here, and that's where I would like to have gotten in, 653.08, because this would have been a winner. But like I said, NQ has not been playing along today. If we happen to stop out on this trade, that'll be it for it today. We'll go ahead and call it. You guys are welcome to continue to trade the indicator up until 10 o'clock Pacific when the call starts. That's when our cutoff is for day trading. You generally want to get earlier market moves. We didn't have any of those today, so we'll see if they fail here. If they do, again, we'll call it for the day on the stream. Not much going on overall other than kind of a choppy, out-of-sync market, so... they spiked it up on PPI, not through the stratosphere or anything. The bulls are consolidating here, so it's kind of an interesting spot for CPI. We'd like to see a reversal candle materialize throughout the rest of the day if you're a bear and looking to the downside. But you do have another huge catalyst tomorrow, and we'll have to see how that plays out as well. Key area here for the bulls, they need to hold this 21.8 level. If they can hold that and spike it higher, then they can run it back to the highs, and 655 would be the target if they can get back above that black line. If they cannot get back above that black line, then this line here up here at 653.65. If they cannot get back above that, then I would suspect we're going to come down and test this area again. I'll be honest with you guys, and you guys should adopt this too. If you haven't seen a trade by about 7:30, the first hour of the day, it's perfectly fine to hang it up and go do something else for the day. You don't need to sit here and stare at the bars. This is my business and what I do, and I do a live stream, so I'm here. So that's what we're going to do. But in general, if the market isn't moving in the first hour of the day or giving you something to work with in the first hour of the day, generally I would say I can try again tomorrow. There are good trades all throughout the day, but the majority of them come in the first hour and a half to 2 hours of the day. And if you haven't seen any good movement or any good trades by then, you're probably mentally and financially better off just to walk away and do something else for the day. You finally bought the indicator, Cyber? Good. That's awesome. Congratulations. Happy to have you on board. You will have access after the stream. I can't give you access right now because I'm in the middle of the live stream, but as soon as I can after the stream, you will have access. Make sure you follow the instructions, watch the videos that tells you how to get it, set it up, and do everything. Make sure you send me the TradingView username if you have to do that. If you haven't done that yet, I'll get you set up. Okay? The indicator is totally awesome. Thank you, Otis. I appreciate that. We put a lot of hard work into it. And although it's not performing awesomely right now on this trade, it is awesome overall. Okay, we just got stopped out at 78 cents there. So we're going to call it for the day, guys. It just was no trading today at all, except for that last one, which I mentioned I was highly skeptical about, and for good reason. But we always trust what the indicator gives us, because there's been many times I've been skeptical and we've had 100% winners. So stopped out on that one. Part of it, we'll see if they put in a higher low and rip it higher, or if they break down. I would suspect they're going to at least test that 652.35 area again, and we'll see what happens from there. Let me get this updated. We will do this again next week. It will be a lot smoother overall. There will be videos next week. Life will be better next week. I'll be in a place to live. We don't have a house yet. We still have to find a house, but I have a mother-in-law house of my uncle's that we're going to have for now, and things will be back to normal with that. So appreciate all of you being here. Sorry that we had one trade only, and it was a losing trade. That's part of trading. Unfortunately, today wasn't the day. We'll see how they finish up. Again, I would suspect a test of this area, and if they break through, acceleration down into a gap close. All right. Have a wonderful day, everyone. We'll do it again next week, and we'll talk to you later. If you're in my rooms, we'll do the live call here in an hour or so.